Hey, this is Danielle. Welcome to the free video. So today I'm going to be talking about Tesla because Tesla had a massive move today. Definitely helped carry the Nasdaq higher. It was the biggest mover in the Nasdaq. Well, I guess if you look at AMC and GameStop, those had some pretty big moves today as well. But I'm talking about real tech stocks. So let's look at this ticker. Now, today it was moving coincidentally at the exact same time frame that it was looking for it to move going into this earnings report. And it started moving because Tesla has requested that shareholders are able to vote on a stock split at the next annual meeting. Now, what was kind of in the fine print is that that meeting is probably not going to be until October, just based on the fact that that's when it was last year. Now, of course, there could always be some sort of surprise, maybe a semi-annual meeting or something like that, but just going on what we know right now, that means that the stock split probably will not be until the end of the year. So while the news definitely provided a huge catalyst, and you know me, I'm always bullish Tesla, definitely think it's still going to go higher. I don't think that we can look for, let's see, where's the move? So I don't think that we can look for the exact same thing that we saw last time when they announced the split, where they announced, basically 3 weeks before it happened, and it just rallied the entire time directly into the split, except for like the last day. But that being said, what's great about this is that was a catalyst that is what ended, that is a catalyst that ended up breaking us out of this key zone right here. It was basically stuck under 1,000, and I was looking at it and I thought, oh man, I would love to trade this thing higher for a run into earnings, because historically it'll trade higher by about 20% in this time frame, which I know seems crazy after it already trading higher by 30%, but that's what the stats are telling us, and all we needed was a breakout above 1,000. That has now come to fruition due to this news. Now all we need is some continuation. So the question here is, now that it's broken through 1,000, and now that it's just sitting just below 1,100, can it keep going throughout this time frame? Now, what I'm suggesting, I know, is a little bit crazy. It's already had a massive rally, but hear me out. Tesla is known for having some massive momentum that doesn't really make any sense. So, based on the fact that the Austin factory is going to be opening up, they're going to be having their GigaFest on April 7th. The Berlin factory has already opened. They have announced that they're going to be able to increase their capacity by about 500,000 cars based on just that factory alone. So once Austin opens up as well, I'm anticipating that's going to be another impact. So, there's a lot of reasons here that Tesla could still go higher, even though it's extended. So what do you do with it? Well, the next target's going to be 1,200, then 1,300, then 1,400. Tesla is definitely going to be one of those tickers that is normally going to trade around those key psychological values, and just so happens that those values overlap pretty closely with fib levels, so it's another good reason to use those as targets. Now, looking at what you can actually do with it, it just depends on how much money you got. Now, the earnings report is going to be, let's see, it's going to be on 27th. It doesn't look like it's confirmed yet. So if you can manage it, definitely looking at the Delta 70 calls is going to be one of the best ways to trade it. However, as you can see, that's going to be incredibly expensive. So I typically like to go for a cheaper option. Normally, that means that I'm going to look for a butterfly in the series prior to earnings. What we're seeing from our stats right here is that within that time frame, we have about $150 expected move, and based on the hot zone, you actually have a $216 expected move. So, let's just call it smack dab there in the middle. Let's say we're at 1,100. that could bring you up to 1250, even 1300. Now, of course, stocks don't go straight up or straight down. So what do we do? Well, normally I like to use a little bit easier of a target. So if, my max target's 1300, just cut it a little bit shy of that. So for example, you have right here a 1200 target. Now the fly is going to be a little bit wide. Honestly, I mean, it's not as liquid as I would like, but that would get me closer to the earnings series if I did it in the April 22nd series. So let's just price out a butterfly, see what it would look like. So normally I'm always going to start with the center strike as the target. So if the target's 1200, let's widen it out. So 1150, 1200, 1250. That's only going to cost you $2. It's one of those things where it's like, why not do that? Your risk reward is insane. You're risking $200 to make almost $5,000. But keep in mind that because the center strike is, or because the width of the strikes are $50 apart, you have a smaller target zone than you would with $100. Now, there's something else that I'm noticing here as well. As you can see, the spread is super wide. The spread is between $2 and $10.55. Honestly, it's really outrageous. So I'm going to change it to the monthly expiration series and see if that'll be a little bit better. Normally, when you're setting up a butterfly, you want the spreads to be tight. You want it to be really around $1 or less each. With Tesla, we'll give it a little bit of leeway since it is such a high price stock. But you see now the spread is going between 458 and 570. The spread is very, very important because the way that people will mess up their butterflies, for example, is they will come in and let's say you were buying this butterfly right now. They're not paying attention to what they're doing. They hit the natural, they pay 570, and then let's say on the way out, they hit it again, and they're paying as much as they possibly can on the way in, and when they sell it, they're getting as much as as little as they possibly can on the way out. So that's one way you can really mess up your flies. So when you're looking at a spread like this, and you say, what series should I do? Well, because of the spread, this series is going to have to be out, which means the only series I could really use is the monthly series, which makes sense to cut down the price target to 1200 instead of 1300. Now, after that, you're looking at this and you're saying, okay, well, $4.58, here's the spread. The first thing I'm always going to do is just, do you ever want to pay more than absolutely necessary? The answer should always be no. So I always come in and try to bid the lowest price possible. If I can't get filled for like 5 or 10 minutes, I'll start moving it up, maybe 5 cents at a time, but don't just go for that number straight out of the gates. Now, looking at the risk reward, I usually like to get about a 1 to 5 risk reward. So if I'm spending $4.58 and my max profit's $4,500, that's a 1 to 10 risk reward. That's actually amazing. So that works for me. I like the price. Then the next question I would just say is people will say, well, it's because, this is out of the money and it's going to have to trade higher by $60 or else the whole thing is going to be worthless. Yes, that's absolutely 100% true. If this stock does not get up to $1,150 plus $4.58, then what's going to happen is this premium is just going to decay and disappear into nothing. So you'd really need the stock price to be up at $1,154.85 before you would actually break even. Now you might say like, oh, that sounds really crazy. But the expected move in this stock in that time frame is $126, so definitely more than possible. So that's the way that I would set it up. If you have a little bit more cash to put at work, you can make it wider. What that will do is it'll make your target point wider. It'll also make the trade more expensive, but you can also make more money. So let's say if you make it $100 wide for $17, Then you have, let's see, about 1 to 4, a little bit closer to 1 to 5, 1.45. When you're looking at your risk to reward. Now on this trade, you're going to be risking $1,700 per contract instead of $450. But if you have, more capital to put at work, that is the way that I would do it. So that is the video that I have for you about Tesla today. If you would like to join me tomorrow, I am going to be having a free webinar. I'm going to be talking about Tesla, Amazon, Apple, and more. I'm going to be talking about my favorite tickers that I'm looking at going into earnings, my specific setups that I'm looking at this quarter. Every quarter has a flavor of the season. And well, this season, a lot of the tickers I'm looking at are earnings destruction tickers, which means that I'm actually looking for them to roll over and die going into earnings. So if you want to check that out, go to simplertrading.com/earn, EARN. Sorry, my handwriting's a little messy there. You can also find it on the Simpler Trading homepage. Other than that, I hope you have a great rest of your evening. Oh yeah, and I'm also going to be giving out my free scan that'll help you identify pre-earnings opportunities. So I hope to see you tomorrow. Have a great rest of your day. Let me know if you trade some Tesla.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.